Kia ora, merry Monday morning. I am Mike from Markets. This is Kiwibank Markets in a minute. It'll be longer than a minute. You know how it goes, especially on a Monday morning. Yeah, okay, so it was a pretty big weekend, really. Let's get a couple of the post-close domestic announcements out of the way first. So Finance Minister Grant Robertson, he is keen on bringing forward significant infrastructure spending. And Prime Minister Jacinda Ardern, she gave us a bit of a taster of what that might be. A $400 million injection into building projects for the nation's schools announced also over the weekend. Yeah, so our chief economist Jared Kerr, he's been arguing for this sort of thing for, it feels like forever. So you can probably expect a deeper dive into the detail in the Kiwi Economics Weekly first view. That'll be out later this morning. Watch out for that. Market-wise, though, yeah, those announcements might prompt a bit of movement in wholesale interest rates at the open. We'll have to see how that plays out. But the immediate question is probably if fiscal policy does more, then does monetary policy have to do less? I don't know. It's not quite that black and white. Nothing ever is. Sorry, excuse me. Sorry about that. We're back, and I've knocked the camera. It's probably not annoying to you, but it's just frustrating to me. Anyway, a bigger picture is where we're up to. Us Globe's major indices, they dipped by about 0.5% on Friday. That move basically attributable to month-end profit taking. Yeah, so while Friday was down on the day, November is a month pretty decent. For the big three US indices, the Dow, the S&P, the Nasdaq, November saw the largest single monthly jump since June. Good times. In currency land, more of the same, really. At the close of play, the Kiwi was still holding within that 64 to 64.40 range. That range could maybe be tested today because early Saturday afternoon, so after the New York close, we had some Chinese manufacturing data that pointed to expansion. Only by a smidge, but still an expansion. So that's potentially a sentiment positive. Also post-close, Black Friday, apparently a success. Another potential sentiment positive. Some measures of US spending have this year 19% above 2018. And according to Bloomberg, Nintendo Switch and Frozen 2 were some of the biggest recipients of the US consumer dollar. I don't have any details on local spending, but I can tell you that I certainly spent money on both of those things over the weekend. And also, if you are my vintage or finer, you know, Christoph, Zolo and Frozen 2 worth the ticket price alone. Anyway, summarising, equities lower, but that's actually due to market positivity. Positivity that was highlighted by consumer spending in the US. No additional negativity on the US-China front. No news is good news there. And domestically, yeah, a shot of fiscal adrenaline with the promise of possibly more to come. Good times. Okay, first view, check that out later this morning. We certainly will be. Have a magical Monday. Kei kiki te anō.